I mean, when you get your paycheck, maybe some of you got paid today. Did you open up the envelope on the stub that you got, said that your direct deposit says, this is the amount of money you got? Did you think, look at that, baby. Look at that. Honey, look at that. Did you go around parading around your wife or husband? How about you high five your kids? Look at this. I got another one of those things I got last week. Look at this. Look at that right there. You see what they gave me? I went there for 40 hours. They gave me that. Like it's something different. You're not parading around with that. That's not an accomplishment. It's just what you expect to do when you go to work. It's a participation award, right? Well, every one of your trades, you win, needs to be simply that. It's a participation award. It was expected. This is what you expect to happen. You're not surprised. It's just the way it is. Okay? You don't want to emotionally charge it. It's not a big deal. It's nothing to be afraid of. It's nothing to really celebrate. You celebrate at the end of the year. You celebrate at the end of the year. This is how much I get to have to pay taxes on. Woo! I love it. That's it. That's the way it works. You do not champion a winning trade, and you don't regret and just go into depression over a losing trade. You're indifferent. It's just business. It's all it is. It's just business. You showing up to your job at your regularly scheduled time, for the time you're supposed to punch in, to the time you go home and punch out. It's just business. That's the relationship you have. The boss says you show up at this time, be here at this time, and go home at this time. And if you do that, you get a monetary reward at the end of the week. Okay. Same process with trading. The process is, I have to do this. I have to show up in front of my charts. I got to do the process of looking through these charts, looking for the thing I'm supposed to be doing as the trader. Then when the time has come, I'm expected to do something with that opportunity. And I have to do what? Manage risk. You're doing it at your job. You're managing your personal risk when you drive there, because you don't know if you're going to get there safely or not, but you're doing everything you can, hopefully, not looking at your phone, texting and whatnot. But once you're at your job, then you're managing the risk of what? Your employer. You don't want to waste supplies. You don't want to waste time watching ICT videos on the clock. Liar. Everything you're doing is managing risk. Are you a good risk manager? Do you speed to work? Are you driving without your seatbelt on? Are you texting, speeding without your seatbelt on? That's not a good manager of risk. You're going to blow your account. These are all things that you need to be aware of, because that's exactly what you're bringing to trading. That's exactly what next year, when everybody's having a hard time, and that culling of the ill-informed street money traders, they're going to be cast out like lepers. This market is going to be harsh to them, but it's not going to be harsh to you, because you're learning, you're being forged in the fires of difficult trading environments right now. These are hard markets, and you're being forged in these fires. You're being prepared. Your steel is being forged in this. You're being battle ready. You're being battle prepared. You're getting all of your armor right now, and you're learning how to use your weapons in a safe environment where nothing can happen to you right now. Nothing can hurt you. It's all upside. It's all advantageous. It's not any weaknesses. This is proper training. This is the right way to do it. And when it comes time for you to be involved in actual trading, whether it be through a funded account or live trading, you will be at the highest point of readiness any trader would be reasonably expected to have. Because it all changes when there's real money involved. That's the part that I can't take you to that. Everybody's going to experience that on a different level. It might be extremely stressful for you. Others would be like, this is way easier than I thought it was. This is fun. But some of you will be thinking, I'm terrified. I can't afford to lose. And you'll have a new learning to go through. But you'll at least be trained properly before you get to that point, which is important. Books and courses don't take you there because it takes time, and they don't want to lose the subscription fees, the membership fees. I told you coming in this year, you're going to have to work. It's going to take longer than you thought. You're going to have to do a lot of things that you don't feel comfortable doing. But you're going to be doing that the rest of your life as a trader anyway. So you might as well warm up to the idea. Back testing, studying charts, looking at charts. Before a trade can form, what are you doing? Looking at charts. You have to look at them, right? You have to. So you might as well get used to the idea of doing it and enjoying it. And that's what tape reading is doing for some of you. It's wonderful to see the comments that some of you are like, I love this. Like, this makes so much more sense to me now. I didn't know what I was looking for. And now I don't have any fear of losing, and I'm learning. I don't get all excited about having to make a winning trade. I'm just studying price, and I'm learning so much. Hallelujah. Thank you, Jesus, because that's exactly what you're supposed to be feeling right now. You're replacing that desire to make money right now when you're not prepared to make money. So it's unrealistic for you to try to make money when you don't know how to make money. I'm sparing you all that frustration and allowing your mind and understanding to develop properly with the proper amount of time. And you'll much more appreciate it next year when I'm not doing this anymore and you'll have all this experience to lean on. And everybody that's never went through this type of conditioning, trading in the environments that we're going to go to in 2024, that's going to be a nightmare for them. But you're going to already be prepared. You're desensitized by then. You know that there's opportunities every day, every week. You know when it's likely to hurt you, when everybody else is being told to rush in there and trade. This is when the markets are moving around. Yeah, they're moving around with the intent to take you out. So why would you want to go in there? There's other days where you can trade with probability. It's more in line with you as a trader succeeding in it. Not, well, it's casino time. I got time to do it. Let's go push the button. And I'm so pleased to see this paradigm shift that's happened just in the first month. I was concerned that I wouldn't see enough of it. I mean, obviously it's not all of you saying it, but as we get further into it, this year, you'll see that there's a lot of progress that you don't understand that you have gained. And this week, I provided you a homework assignment. I purposely told you to draw your account down and then come back up before the close of this week. In a week that is already hard. Now, admittedly, we had some really good price runs on Thursday and Friday, which were too good for me to pass up. That's why I showed you examples with it. And I hope I'm not encouraging you to want to trade those days because it's like that this week. It's not like that every time there's non-farm payroll. Sometimes it's just ugly. It just goes nowhere, chops around, and it doesn't do anything. So if you have that in your mind, as that's the usual menu on non-farm payroll, then you won't be so enticed to trade in it and hurt yourself because you can do damage. And then think about it. It's at the beginning of the month. So now what are you going to do? You're going to start the month in drawdown. Now you got to spend the first week and a half getting out of drawdown. And then you're going to be worried about going back into drawdown in the third week of trading, which is going to be bringing you what? Mental baggage, what if thinking that could have always been avoided by simply not trading on non-farm payroll week on Thursday and Friday. It's simple. It's simple. But you want to do something that everybody else is saying that they should be doing, getting in on the days that moves around. Well, there's a lot of movement on FOMC. Are you able to get in there before the rate announcement come out? How about the CPI number? There's a lot of movement there too. It's funny that the ideas don't apply to them, but it's the same thing with non-farm payroll. It's not worth it. It's not for professionals. NFP, not for professionals. But you witnessed this week a level of precision, continuity, consistency, visibility, all during a time when the market is predominantly unfavorable on Thursdays and Fridays of non-farm payroll week. And that should be an encouragement to you. For a new student, it's probably hard to appreciate where you're at and what you're learning, because you don't have a reference point to say, this is the other alternative. And for someone that has gone through other styles of trading, maybe tried different approaches to trading, and now they're doing this, it's rewarding to me as a mentor reading their comments and saying, I've been doing this, and none of it's ever worked or made sense to me. This makes perfect sense. That's exactly what I'm aiming for. That's exactly what I'm aiming for. Because there are different ways to skin a cat and make money trading, yes. But those disciplines don't get to the root cause of why price is going, where it's going, when it's going to go there, and why it should. That's what I try to deliver as an educator. When I'm looking at price, I'm internalizing a whole lot of things that create a narrative. Why is it going to go up there? Why should that candle not be broken in the process of going up there? What should be reasonable in terms of retracements, but no further than this? See, that's logic. That's stuff you don't have that in their traditional analysis. Trust me, I would tell you if it would save me a whole lot of time talking. So here you go, just do this and be done. But it's been 1 month, and we have been watching live price action. I've called out specific things that I haven't taught before, and you watch them deliver in price real time with a 1 minute chart. Precisely. I'm not, and as you can hear me when I'm talking about it live when it's happening, I'm not surprised. I'm not hopeful, scared. This is what I'm looking for. This is what an algorithm should be doing at this time, right now, doing this. My focus is on expectation of what I know is being driven by code. I'm not worrying about wrong or right. I'm telling you, at this moment, in this instance right now, what the chart has shown right here, this is what we expect to see. And man, is it satisfying to see people say, what? That just happened. Exactly. That's where my satisfaction comes from. I'm not looking at the charts and saying, wow, it still works. That doesn't happen. What I get my high off of is you all experiencing, because I remember exactly what it felt like. And I live vicariously through all of my students' new discoveries, seeing something that I've grown bored of seeing. In that moment of astonishment where the veil's pulled back and you finally see what this market really is. And you all watch it in your charts real time. I often, many times, think to myself, that's when I'm usually putting a little smiley face tweet out. Because I know you're looking at the chart probably with your corners of your mouth turned up too, and a smirk or a smile. Because, damn it, it happened again. There it is. It just happened again. It's not random, right? And that's exactly like I'm in the room with you. Like I'm watching that chart just like you are. And the same thing that you're experiencing and you're smiling, thinking, man, this is not random. This is predictable things that I can see. He taught this. He pointed this very thing out, and it's going right there. And then as soon as it does, I already have a well-written tweet with an image that's already pre-selected. All I'm doing is waiting for time and price to meet. I don't have the time to type all that stuff out right when it hits there. I'm doing it in advance because I know what's about to happen. It's what I've told you was going to happen. And then as soon as it happens, the tweet hits. And I do that because I want you to read that. And some of you read it as bragging or arrogance. No, I'm showing you, for the students, that that is a monumental experience for you to remember. It makes it meaningful. Otherwise, it just looks like, so what? The market went to that level there. And you didn't notice the tweet that outlined why it should. I'm not interested in that person. That's not my audience. My audience is the folks that are looking at my tweets, actively engaging their own charts, going to that specific candle and saying, okay, he said this, now I'm watching it. How does it behave? And then what is he saying we're looking for? Buy side or sell side? That gives you what? Bias. So when it starts gravitating towards it, I'm typing up a tweet that says 388.7 booked, and some kind of emoji to make everybody laugh or smile or whatever. And it's just my way of just putting a bullet point, a little pin in your memory about that was an experience that you watched unfold live. You knew it was happening beforehand. You watched it deliver, and now you have a memory of it. It's meaningful. It's impactful. And then you're going to be more inclined to do what? Journal it. And then you're going to put it in your own words. Whereas you watch me outline it, I can tell you in the tweets to say, okay, screenshot your chart right here, label it with whatever. How many of you are doing it? I would venture to say it's probably a good number of you that aren't doing it, and you're missing the opportunity to grow, to learn how to do this independently, because you're going to basically be mimicking what I do. That's the only copycat stuff that I think is worthwhile, not copy every model that I try to trade with. I mean, I could trade with all of them, but I have ones that I favor over others. This is my personal preference. It doesn't mean that the other ones are not as good. It just means I like these specific ones. And what is that? It's a second stage distribution in a sell model, and a second stage accumulation or reaccumulation in a buy model. They're my unicorn setups. They're just, my eye is constantly seeking that. But if you put me in front of a chart, give me at least 5 minutes and I'll find a setup. It may require me to be on a second chart, but I'll find a setup. That's what I was doing this week. I was going in there, doing lots of trades, doing everything up and down. And you shouldn't feel like that's something that you need to do to be good. Being good is not what you're doing here. You're being consistent, eventually working towards profitability that's consistently profitable. That's your goal here. And your first rung objective is 5 handles.